You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports. We connect the dots so you know the actions you can take out your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you even if you don't have any needs today. Save this number on your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today, although it may be a little bit of a hangover. No, not that kind of a hangover. Oh, man.
You know better than that.
Well, maybe you don't. Yesterday was National Ice Cream Day. And, you know, there's no way of going around an ice cream day. You can't skip it. You just have to extend it. That's just my thought process. You have to let that one go for a while. It's kind of like people with birthdays. You ever come across somebody who does not have a birthday? It's a birth month, and they celebrate all month long. That's kind of my wife, but so yesterday was Ice Cream Day. I think we're gonna just make it Ice Cream Month. I'm game. Anybody on that one with me? Anyone want to join me in that, or are you gonna hold out? Yesterday was also National Lottery Day. Now with the Mega Lotto, are you playing the Mega Lotto? It's $500 million right now. $500 million. What would you do with $500 million? Anything you would like to do, you can do it. Just throw that out there as well. Now. Well, before I get into that, we'll come. Josh, remind me to come back. I want to talk about lottery in a minute. So today's also National Caviar Day. Now, caviar. Do you like caviar? So a friend of mine makes a great caviar pie. So I like it that way. I was also taught years ago, or introduced years ago, to caviar on a baked potato. It is really good. And hey, if you look at me, you could tell I am an expert in what's really good. I've mastered good. Okay, you know, it's not like I'm a little toothpick here that tells you that where the good food is. At my size, you know, it's either good or it's good. It doesn't matter. And it's Sour Candy Day today. Sour Candy Day. Almost any candy works, but sour candy is good. I like sour candy. Let's move right along and see what the markets are doing today. Dow Jones Industrial Average up 165 points. S&P 500 is up 30. The NASDAQ is up 160. Oil is up $4.26 a barrel. It's the whisper. That's the problem. I'm going to tell you what the whisper is, and I'll tell you why it's such a problem. But it's the whisper that's causing the problem. Gasoline now $4.60 per gallon of gasoline right here in the formerly Golden State. Josh is out there traveling right now. You're at 434, Josh. You may want to stay there in Florida at 434 when you compare it to Nevada at 533. $1 a gallon cheaper where you are right there. Jody's at $4.90 a gallon, and temporarily Lori's at $4.16 a gallon. Our tremendous underwriter in Louisiana. But I think she's going to come out and visit us in California just so she can see if we're really at $5.99.1 per gallon. $5.99. Yeah, gas prices are going down, but we'll talk about that as well. But I want to get back to lottery because it's a big issue. I was listening to a business channel recently, and they were talking about the lottery and how it's a tax and this and that and the other thing. And I'm going to tell you, in my world, and I hope it's the way you think also, the lottery, if you're playing the lottery, it's called entertainment. Your likelihood of winning the lottery is about as likely as being discovered to be in a movie when you go to a movie theater. It's not going to happen. Very unlikely that it'll happen, but it does to some people. You know, once in every, 300 million is your odds of winning the lottery. So it's called entertainment. Treat it that way. Don't go putting too much money into it. You know, but if you want to put a couple of bucks here and there, 5, 10, whatever it is, whatever you're comfortable with, whatever you call entertainment. I'd rather put a couple of bucks into the lottery than go to a movie. I'm not a big movie guy. Right now, you can't even watch TV. I mean, I tried to find, I'm a sports nut. There was not a sporting event after the British, not the British Open. I think you got to call it the Open Championship now. They changed their name. So after that was over yesterday at 11 o'clock in the morning, because it's played in Britain somewhere, there's no real sports on. I don't know why. I don't know. The Angels don't play. Haven't played all year. That's a whole different story. But there's no Angel game on. Why on a Sunday, even though it's right before the All-Star game, there was no game on. There was no Sunday night game of the week. What is there? I'm not into soccer, men's or women's. That doesn't matter. I'm not excited by that. And 3-on-3 basketball, I don't even know what that's all about, so I can't figure that one out. Lacrosse, another one. I don't know it. I don't understand it. Did I say soccer? You know, that one, I just sleep through soccer. That's what, to me, I know there's people that love it. I know it's a popular sport. To me, it's like watching the grass grow. I just throw that out there. It's not my cup of tea. But it's entertainment. Don't treat it like it's anything more than just a little bit of entertainment. Don't go living by it. Don't go making your plans on what you're going to do when you win, because the likelihood is you're not going to win. Just throw that out there. So just, play it for the entertainment value of the lottery. Now, why did I say when I was talking about the markets, the whisper is the problem? Well, if you remember, before the Federal Reserve announced their last rate hike, and I told you they were not going to do the 75 basis point hike. They were not going to do the 50. It was going to be the 75. And why was I so confident that was going to happen? Well, if you remember back then when I told you that it was going to happen, I shared with you that the Federal Reserve likes to give out a hint. They don't like to shock the market. So they give out these hints so that the market knows exactly what they're thinking. Well, next week, the Federal Reserve will be having their next meeting. And there was question when the CPI report came in so hot, 9.1% inflation, that maybe the Federal Reserve would go to 100 basis points instead of 75. Remember, 1 basis point, 75 basis points is 0.75 of 1%. 100 basis points means it's 1%. So somehow last time the whisper went to Nick Timiraos. Nick T. I can't say his last name. Timiraos, something like that. I can't say, whatever. So he got the whisper number. Well, he got the whisper again now, and he got the whisper saying, it's going to be 75 basis points. They're probably not going to do 100. So just throw that out there for you. That's why the stock market went up. The market doesn't like high interest rates. But the bond market, it does like the higher interest rates. And that's why the bond market is moving the opposite direction. The bonds are not as strong today. Mortgage-backed securities have recovered a little bit, but they're down 28 basis points. And the 10-year Treasury is up. The yield, the return on the 10-year Treasury is up 8 basis points, which means that bond is down also. So all of that comes from Nick Timiraos and his whisper number from the Federal Reserve. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we got a lot of stuff to go over today. We're going to do 2 workshops. We're going to talk about what are closing costs, and we're going to talk about how to buy a second home with the equity in your existing home. We also talk about wondering where you'll move if you sell your house today, and we may even get into a couple of better outcome segments Brought to you by mycdlp.com, mycdlp.com. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the program and the product. You just need to make the call, 800-306-1990, 800-306-1990. Let's take a look at what's going on in the world of the markets today. The Dow Jones Industrial, the S&P 500, I should say, down up 30.82, up 30.82. 10-year Treasury's up 8 basis points at 3.0060. The mortgage-backed securities down 28 basis points. And OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. 10-year conforming rate, 5.784. 30-year jumbo rate, 5.5225. 30-year FHA was at 5.598. Best loan on the market for those who earned it, the 30-year VA loan, 5.328. And for those of you in the rural areas, 30-year USDA loan, 5.573. 5.573 is the rate there. So let's just take a look. We're looking at all those numbers for you. We're watching them. But now the question becomes, why, Ron? Why is it happening? We can go to anybody and get numbers. We need to know why. What's going to happen down the road? Well, let's take a look and we'll see what the market, what's driving these markets. I told you one of the items that's driving the markets is that Fed whisper number, understanding that the Federal Reserve does not like to shock the market. They like to telegram. They like the markets don't like surprises. They don't act real well on surprises. So initially we thought there was going to be a 50 basis point hike. Then we learned, no, it's going to be 75 basis points. That was June's news. We got that whisper from Nick Timiaros. No, now Nick's come back out and said, well, we're not going to get a 100 basis points hike. Sounds like it's probably going to be 75 basis points when the Federal Reserve releases their next set of numbers. That'll come out July 26th and 27th. And again, there was speculation because of that hotter than expected inflation numbers. Remember, the markets the bonds hate inflation. Now, one of our partners, they actually did a survey this last week, 3,000 mortgage and real estate professionals around the country for current housing market conditions. The results of the July 2022 release showed that 66% of respondents reported their market was still active to very active. 33% saw moderate to significant pricing pressures. Of those that said activity was slower, many cited that it was due to a lack of inventory. Many are still seeing multiple offers, but less than previously. Overall demand is still outpacing supply, but to a lesser extent. If you want to see all the results of this survey that was done, go to our social channels, Ron Siegel Radio on Facebook. You can go to Ron Siegel on Instagram, on LinkedIn, on all the major platforms. We're on all of them. And we've got the full infographic right there from our friends at MBS Highway. So it's all real good information. I suggest you take a look at it. And just throwing a little aside in there to our great team, I like to pray. Well, it's called evidence of success. It's not that we're trying to pat ourselves on the back. Our team actually was able to help a gentleman in one of the hot markets in the country secure a winning bid on a property. And he was able to go get his rate about 1% below the OBMMI average interest rate, 1% below. And he paid a little bit over asking price and just worked out really well last week from the team. So congratulations, our team, at getting that done. If you want success like this, if you want results like this, or to understand these kind of issues, just give us a call at 800-306-1990. The team would be more than happy to see what we can do for you. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Speaking of buying a home, well, first off, if you're thinking about buying a home, obviously you need to go and get our Home Buyer's Guide. The most recent issue of the Home Buyer's Guide is available right now, rsrhbg.com, rsrhbg.com. Get a copy of the guide. It's free. It does not cost you a thing. Compliments of Ron Siegel Radio. We come out with a new guide every quarter to try and make sure that we're giving you the latest, greatest, best information around if you're thinking about buying a house. But how do you buy a second home with equity, using the equity in your existing home? Well, that's our workshop for today. And again, we put all of our workshops right there on our YouTube channel, our Vimeo channel, or if you just send a text message, email, smoke signal, any of those things, we'll get it to you. How to buy a second home with equity in your existing home. You may be thinking now is a great time to buy a second home or investment property. Having enough money for a down payment on a new home is often one of the biggest struggles homeowners face. Many people don't want to tap into their 401k or cash right now, but you may be wondering if it's possible to tap into the equity you have in your existing house. For some home buyers, borrowers, homeowners, you may be able to leverage the equity you have built up in your existing home to buy another property. I'm going to show you how you can use existing equity in your existing home to purchase another home. There are a few options for using your equity in your house, and you always want to consult your accountant to find out about any tax implications. Let's look at some of the options you may have to tap into the equity of your existing home. Number one, refinance your existing property. The first option you may consider is to refinance your existing home with a cash-out refinance home loan. Cash-out refi allows you to tap into the equity in your home and take cash out. This cash can be used to remodel your home, pay off bills, or put your kids through college. The money could also be used as a down payment on another property. There's often seasoning requirements on your down payment funds when you buy a new home, so you'll want to check with us and get those requirements. But refinancing your existing property may allow you to tap into your equity and use it for a down payment on another home. Interest rates on primary residences are usually lower than on investment homes. With a cash out refi, your total amount typically cannot exceed 80% of your home's value. Take out a second mortgage. Another way to tap into the equity in your existing house is to take out a second mortgage. There are many second mortgage options available, including a home equity line of credit or a HELOC. A HELOC works like a credit against your home. You do not have to draw all the funds out of the HELOC loan. It may provide you with the funds needed to buy a home as a rental or even consider buying a home and fixing it up to sell. There are seasoning requirements for a down payment, so you want to plan ahead and work with us to find out the specific requirements. There's also a new product. Well, it's a re-release of an old product. It was on the market long time ago. I used to use this before the Great Recession. But if you have a property that you own free and clear, any age, you may be any age, if you fit the guidelines, if you own the property, you can set up this loan on that property. You use the money when you want to, you pay it back when you can, use it again, pay it back again. So it's a first mortgage that acts almost like a HELOC, but it's got a sweep feature in there. So your effective percentage of interest, your effective percentage rate is going to be much less than what the market rate would be because of the way the funds go in and out of this product. Not exactly the easiest one to understand, but I understand it. So you can give us a call at 800-306-1990. Understanding the downside of this HELOC, when you use your existing home to find a second home, you stand to lose your primary home if you fall behind on the loan payments. Don't do that. Equity lines of credit usually have variable interest rates, which means your payments could skyrocket over the course of time. Home equity loans tend to have shorter terms than standard mortgages, which means you may have a larger monthly payment to manage. If your payments fall well within your budget, then a cash out refinance or equity line may make sense. But if funds are tight, then the cons may outweigh the pros. Whatever you decide, be sure you're working with your accountant, your financial advisor, and of course our team to get all the best advice. You may be sitting on an opportunity to expand your home ownership with the equity in your existing home. That's just an idea there for you, how to buy a second home with the equity of your existing home. Now, I also hear that there are some people that say, well, Ron, why would I want to do that? Because I may have a very low interest rate on my first mortgage. Well, it's a matter of return. So I'm not a big one to say, okay, well, being that you've got a 3% or 3.5% loan, you can't ever do anything with that money because home equity makes you zero rate of return. So what is the net effect on your net worth? Think about that part of it. So if you finance your existing home and you go from a 3% to a 6%, and I don't know what your numbers are. I'm just throwing those numbers out, pulled them out of my hat, which I'm not even wearing. You go from a 3% to a 6%. But now you're taking and you're adding, say, $500,000 more in assets. And those assets are growing, say, at 5%. Well, your assets are growing at $25,000, and maybe the interest expense for the whole year was maybe the change in that. The change was maybe $10,000. Well, would you trade $10,000 for $25,000? And again, I'm just pulling numbers out of the air. We could do it exactly and precisely for you. If you have some ideas in mind, just send over the scenarios. RJ at RonSiegelRadio.com. RJ at RonSiegelRadio.com. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we're going to do another workshop. We're going to talk about what are the closing costs for buying a home. Don't forget, if you're buying a home, get the Home Buyer's Guide, rsrhbg.com, rsrhbg.com. Wondering where you'll move if you sell your house today? We'll talk about that as well. We might even get into better outcomes. I've got a couple of them that I've been holding off. What's the difference between divorce lending and divorce mortgage planning? And avoid language traps in the marital settlement agreement. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com. rsrhomescout.com. Wondering where you'll move if you sell your house today? Well, before you even think about that, you got to get the Home Seller's Guide, rsrhsg.com, rsrhsg.com. If you're thinking about buying or selling, if you're thinking about selling a house, RSR, we update it every quarter, rsrhsg.com. So back to what I was saying. Wondering where you'll move if you sell your house today? If you put a pause on your home search because you weren't sure where you'd go once you sold your house, it might be a good time to get back into the market. That's because today's market is undergoing a shift, and the supply of homes for sale is increasing as a result. That means you may have a better chance of finding a home that will meet your current needs. Here are some options to consider. Buying an existing home can give you that lived-in charm. According to the National Association of Realtors, NAR, the supply of existing homes, homes that's been previously owned, has steadily increased since the beginning of the year. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing a graph that indicates inventory levels are rising, and that's largely due to more homes coming onto the market and the pace of sales slowing. So if you look, the supply of existing homes has grown. Seasonally adjusted month supply of existing homes since January was 1.6, February 1.7 months supply, March 1.9 months supply, April 2.2, May 2.6 months supply, and I'll have a lot of updated numbers for you tomorrow. As the graph shows, if you're looking for a home with lived-in charm, supply is rising, and that's great news for you. Danielle Hale, chief economist for Realtor.com, gives insight into why more homeowners are listing their homes and adding to the growing supply of existing homes today. Quote, home sellers in many markets across the country continue to benefit from rising home prices and fast-selling homes. That's prompted a growing number of homeowners to sell homes this year compared to last, giving home shoppers much-needed options. We've seen more homes come up for sale this year compared to the last year, unquote. There are several benefits to buying an existing home. Many buyers want to purchase a home with history, and the character of older houses is hard to reproduce. Existing homes can often be part of an established neighborhood featuring mature landscaping that can give you additional privacy and boost your curb appeal. Plus, timing can be a consideration as well. With an existing home, you can move in based on the timeline you agree to with the sellers rather than building a new home and waiting for construction to finish. This is something to keep in mind, especially if you need to move sooner rather than later. Just remember, while more sellers are listing their homes, supply is still low overall. That means you'll have more options to choose from as you search for your next home. But you'll still need to be prepared for a fast-moving market. Purchasing a newly built or under construction home means brand new everything. Census data shows there's an increasing number of new homes available for sale. It includes homes that are under construction, soon to be completed, and fully built. And again, we're showing you a graph. The supply of new homes for sale has also grown this year. Supply of newly built homes has grown. January, 5.7 months supply. February 6.0, March 6.9, April 8.3, May 7.7 months supply of new homes since January. When building a new home, you can create your perfect living space customized to your lifestyle. That could mean everything from requesting energy efficient options to specific design features. Plus, you'll have the benefit of all new appliances, windows, roofing, and more. These can all help lower your energy costs, which can add up to significant savings over time. The lower maintenance that comes with a newer home is another great advantage. When you have a new home, you likely won't have as many little repairs to tackle, like leaky faucets, shutters to paint, and other odd jobs around the house. And with new construction, you'll also have warranty options that may cover portions of your investment for the first few years. Keep in mind, purchasing a new home could mean waiting a considerable amount of time before you can move in. Robert Dietz, Chief Economist and Senior Vice President for Economics and Housing Policy at the National Association of Home Builders, NAHB, explains, quote, new single-family home inventory remained elevated at a 7.7 month supply. However, only 8.3% of new home inventory is completed and ready to occupy. The remaining have not started construction, 25.9%, or are currently under construction, unquote. That's an important factor when making your decision and one you should discuss with a trusted real estate advisor. They'll help think through all the pros and cons of both new and existing homes to help you arrive at your best decision. Bottom line, with the supply of homes for sale rising, you have options for your next home no matter what your preferences are. If you have questions or want help deciding what's best for you, let's chat. And as always, I ask, if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you to introduce them to us? That is the Real-Time Real Estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. One issue I do want to make sure that you're aware of when you're contemplating buying that new build, there is one of the new build companies, one of the large builders around. I won't say their name, Lennar. I'm not going to even tell you who I think they might be, Lennar. But they won't cooperate with realtors. What does that say to me as a consumer advocate? And I don't know them. I don't know their system or anything. But what does it mean to cooperate with a realtor? Well, that means that they will pay the realtor to come in and bring a buyer to them, and they'll pay the realtor a commission. Very, very standard in real estate. The seller will pay the buyer's agent fee, the buyer's agent's fees. Now, why would a builder not want to do this? Why would they go against that? Only two reasons that I can think of. Maybe there's more. Maybe I'll even think of more as I'm telling them to you. One reason is, well, maybe their costs have gone up and they can't afford it. Maybe. Another reason could be maybe they don't want you getting expert advice. And then I would say, why? Are they hiding something? What's the reason they don't want to have you represented by a realtor? Just throw that out there for you. You make your own call, make your own decision, but maybe there's a reason why they don't want to pay a realtor. Maybe they say, well, you wanted to bring a realtor, you want to get advice, you pay for it yourself. They're not going to include it in the cost of the transaction, but anything else they want to include, they will include. And oh yeah, be aware in certain states, they even have a clause in there that says they can back out for any reason at any time. So you put in all your money into growing this or building this property the way you want it. You've put in some money into special upgrades and features, and they come back at the end and say, yeah, we don't want to sell the property to you now. I think they'll give you your money back, but is that really what you want after waiting all that time? Just throw that out there for you. My opinions, I can only share my opinions, my experience. Better Outcome segment today being brought to you by mycdlp.com, mycdlp.com. Get a hold of another free tool, mydymworkbook.com, mydymworkbook.com. It'll help you. Technically, it's the Divorcing Your Mortgage Workbook, but it's mydymworkbook.com. Any real property, you put it on there, send the workbook back to us. We'll put a report together for you, send it right back to you. Avoid language traps in the marital settlement agreement. We know it's important to be mindful of words used in a divorce settlement agreement to avoid language traps in future conflict. However, word choice can also affect the divorcing homeowner's ability to obtain mortgage financing. Therefore, while it may not be top of mind to word the divorce settlement agreement to meet mortgage guidelines, it could significantly help divorcing homeowners to clarify specific terminology used in the settlement agreement. Make sure your words mean what you think they mean. The terms alimony, maintenance, and spousal support are often used interchangeably to describe payments made by one spouse to another after a divorce. The terms may be identical in meaning, but not necessarily in the eyes of an underwriter. As an example, from a liability debt perspective, some agency guidelines differentiate between alimony and maintenance, while other agencies do not. Suppose your divorcing client is paying maintenance and needs to obtain mortgage financing. In that case, you can help them avoid terminology issues by clarifying that alimony and maintenance are considered the same. It could be beneficial to include a clarifying statement such as, quote, all maintenance payments paid by husband to wife according to this agreement are intended to constitute alimony, unquote. Does it really make a difference? Well, let me give you an example. Joe is ordered to pay Jane 30% of his gross monthly income as spousal maintenance. Joe would like to purchase a new home. However, the monthly maintenance may have a negative effect on his buying power. Joe's gross monthly income adjustment for maintenance, $10,000 less than 30% is $3,000. Adjusted gross monthly income, $10,000 to $7,000. Debt load, monthly maintenance, $850. Debt to income ratio before housing, 39%. DTI of 45% available for the new housing expense. So words matter. Your numbers go from 39% debt to income ratio if you put the right wording into 12%. Your DTI goes from $650 to $2,300. So think about some of these numbers, the way they're being used. I'm just throwing that out there for you. In certain situations, Joe's maintenance payment could be reduced from his gross income rather than classified as a true debt or monthly obligation. So we also show the positive effect of adjusting the monthly maintenance obligation and increasing Joe's purchase opportunity from a housing payment of $650 per month to $2,310. That's what his purchasing power is, just by using the correct terminology. Specific lending agencies will only allow this adjustment for alimony, and if the clarification statement above is overlooked, it may limit Joe's ability to obtain mortgage financing. Divorce mortgage planning will have a profound effect on divorcing homeowners' mortgage opportunities. Contact a CDLP, that's a certified divorce lending professional, to make sure there are no language traps between the intent of the divorce settlement agreement and mortgage guidelines. It's much easier to get it right the first time than risk mortgage denial because of word choice or lack of clarification. Here's some help tracking down a CDLP in your area. It's simple. 800-306-1990, 800-306-1990. As always, I want to remind you, we're not giving legal advice. We're not giving tax advice. Got to go to the professionals for that. That's not our world. Certified divorce lending is our world. That's why we've got the certification. That is the Better Outcome segment brought to you by mycdlp.com, mycdlp.com. When we come back, we've still got a lot to get to for you today. We're going to give you we already did that. What are closing costs for buying a home? We'll talk about that. And what's the difference between divorce lending and mortgage planning? We'll talk about that one as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at RonIsMyLender.com. That's RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Better Outcomes segment today being brought to you by mycdlp.com, mycdlp.com. Make sure you get a hold of your Divorcing Your Mortgage workbook, mydymworkbook.com, mydymworkbook.com. Fill it out with all your real property holdings. Send it back. We'll put together a real property analysis for you. Obviously, it's compliments of your friends here at Ron Siegel Radio. What's the difference between divorce lending and divorce mortgage planning? Good question. Many times in a divorce, we're more focused on curing the problem at hand, i.e. distributing real property and assets, that we forget there is life after divorce. The biggest challenge is the lack of knowledge, understanding, and preparedness of how the various pieces of the divorce puzzle fit together and overlap. The two most commonly asked questions are, what is the difference between divorce lending and divorce mortgage planning? What is the difference between divorce lending and divorce mortgage planning? What is the advantage of having a certified divorce lending professional, CDLP, on your divorce team over the traditional loan officer? The answer to both questions? A lot. What is divorce mortgage planning? Well, if a picture was worth 1,000 words, there is the intersection of divorce, real estate, and mortgage planning. You're dealing with family law, real property, financial and tax planning, mortgage planning, financial opportunities, retirement, support income quadros, marital versus separate property, and all of that goes right around the home. So, and if you want the diagram, just give me a call and we can get the diagram for you. We have it in our show notes today. Diagram shows just how intersected the four pieces of the divorce puzzle, family law, financial tax planning, real property, and mortgage planning are when the home itself is center stage. All of these pieces of the puzzle converge with each other. Divorce mortgage planning is a holistic approach to evaluating mortgage options in the context of the overall objectives to divorce situations. Working directly with the divorce team, a CDLP understands the intersection of divorce, financial and tax planning, real property, and mortgage lending. The role of the CDLP is to help integrate the selected mortgage into overall long and short-term financial and investment goals to help minimize taxes, minimize interest expense, while maximizing cash flow. Our mission is to help divorcing homeowners make more informed decisions regarding their home equity solutions and mortgage financing opportunities during and after the divorce. Founded in 2014, the Divorce Lending Association supports ethical lending standards and is dedicated to helping members through education and access to professional development opportunities working with divorcing homeowners. Again, the diagram is just a fraction of the possible overlaps, yet amplifies the need for a knowledgeable and robust professional divorce team. Capital gains may be involved, especially in today's real estate market. Support income directly affects mortgage planning. There may be a need to look at protecting the mortgage interest deduction. Property disposition, it's not as simple as who gets the house and who moves out. Are we looking at it at an equity buyout or positioning both spouses to purchase a new home? What's the advantage of working with a CDLP? The answer is simple: knowledge. When the home is involved, a certified divorce lending professional has the knowledge, the background knowledge to support the divorce team and the divorcing homeowners. Whoa, that woke me up. The CDLP's knowledge goes beyond mortgage industry guidelines. Any mortgage lender who can read underwriting guidelines can do a loan for a divorced homeowner, aka divorce lending. The value that a CDLP brings to the table goes much further than divorce lending and how to interpret mortgage regulations and guidelines. CDLP supports and works directly with the family law professionals, helping the divorcing homeowners make more informed decisions regarding their home equity solutions. A CDLP is capable of working with the divorce team to apply financial and tax planning strategies to meet income requirements. A CDLP is competent in identifying contradictions between the marital settlement agreement and mortgage regulations, while skilled at working towards solutions with the divorce team. If you want more information, then give us a call, 800-306-1990, and you'll have a much clearer understanding of not only the difference between divorce lending and divorce mortgage planning, but you'll truly see the difference a CDLP can make. The Certified Divorce Lending Professional program is offered by the Divorce Lending Association, whose contributors have years of family law, financial and tax planning, and real property and mortgage planning experience. So who you work with really does matter. As a divorce mortgage planner, we help divorcing homeowners make a more informed decision regarding their home equity solutions, while helping the divorce team identify any potential conflicts between the divorce settlement, home equity solutions, and real property issues. Involving a certified divorce lending professional early in the divorce settlement process can help the divorcing homeowners set the stage for successful mortgage financing in the future. And I want to just make it clear, this is informational purpose only and not for the purpose of providing legal or tax advice. You need an attorney or a tax professional to get legal or tax advice. Just for trying to get you the information. Again, get the workbook, mydymworkbook.com, mydymworkbook.com, get you the information that you need, and then you just send it back. That's the Better Outcome segment, brought to you by mycdlp.com, mycdlp.com. So the other workshop, easy for me to say, it's a Monday morning. What am I doing here? The other workshop we want to get for you today: what are the closing costs for buying a home? What are the closing costs for buying a home? If you're in the market to purchase a home, you may be wondering who pays the closing costs. Typically, buyers and sellers each pay their own closing costs. Today, I'm going to talk about the closing costs associated with buying a home. Buyers' closing costs. When you buy a home, there are closing costs. These are costs that go above what you are paying for your down payment. Closing costs are your out-of-pocket fees used for items like getting your home loan, having the house appraised, getting the title transferred into your name, and so on. Your closing costs can range between 2 and 5% of your loan amount. This means if you're taking out a $200,000 mortgage, I know I'm using a small number, but you can multiply it by 2, 3, 5, whatever you need to. If you're taking out a $200,000 mortgage loan, closing costs could range from $4,000 to $10,000. The amount a home buyer has to pay in closing costs can vary a lot, depending on the price, location, and other factors. Typical closing costs paid by the buyer include an origination fee. This is the fee from your mortgage lender used to set up and process your application, verify your documents, underwrite, and close your loan. Appraisal fee if you need an appraisal. This is the fee to have your home appraised. Now remember, the appraisal is not telling you what you should pay for the property. The appraisal is telling you what the value of the collateral is to a lender. That's all it is. What the appraiser's assessed value of the collateral is for the lender. You have the right to pay more if you want to. That's your choice. Title search and title insurance. A title search ensures that your new home's title is clear and no one else can claim rights to the home or property. Title insurance provides protection against undiscovered claims. Upfront mortgage insurance or funding fee. Some home loans require an upfront fee to insure or guarantee the mortgage. Government-backed homes like FHA, VA, and USDA mortgages all have upfront fees, though you can roll these fees into your loan amount instead of paying at closing, and in some instances, they're waived completely. Discount points let you buy down to a lower interest rate by paying an extra fee at closing. Should you do it or should you not? Don't know. We can put it together a total cost analysis for you to see if it makes sense for you. But I'm not going to ever tell you that discount points are not good because we're using them a lot right now to help a lot of families. Escrow. Escrows are set up so that you prepay money that will be placed in an escrow account and dispersed as necessary to pay for your property taxes and homeowners insurance. You'll also have your down payment due at closing, but this typically is not thought of as a closing cost. Any earnest money you paid when you made an offer on the house will be credited towards your down payment at closing. The type of mortgage you choose can also have a big effect on your closing costs, and the biggest of these is mortgage insurance. Before I go too far on that, I do want to let you know there are two different usages of escrow. In California, we use escrow companies. They're like the middleman, an independent third party or a third party referee, so to speak. That their job is to read the contract and make sure everybody follows every rule of the contract, as opposed to escrows or impound accounts, which is an account set up to hold the collection of your property taxes and homeowners insurance. Two different uses of the same name. Type of mortgage you choose can also have a big effect on your closing costs, and the biggest of these is mortgage insurance. Mortgage insurance, or MI, is paid when you put less than 20% down to buy a home. The mortgage insurance helps protect the lender. Most mortgage insurance is paid your monthly payment and considered an annual payment. However, there are some loan programs that also have an initial mortgage insurance premium that is called Upfront Mortgage Insurance Premium, UFMIP, and maybe do at closing as well. Let's look at some of these types of programs with upfront mortgage insurance. FHA, Upfront Mortgage Insurance, again, that's the UFMIP. The first program is FHA loans, home loans, which require annual mortgage insurance and an upfront mortgage insurance fee. The upfront insurance fee is equal to 1.75% of the loan amount, or $1,750 for every $1,000 borrowed. Despite its name, FHA, Upfront Mortgage Insurance, does not have to be paid at closing. Most borrowers roll this into their loan rather than pay it with cash. Rolling UFMIP into your loan will greatly reduce your closing costs, but it does mean you'll pay interest on the fee over the life of your loan. The VA loan funding fee. VA loans do not require annual mortgage insurance, but they do require a one-time funding fee due at closing. For first-time home buyers, the VA funding fee is usually equal to 2.3% of the loan amount. Buyers who've used the VA loan before will pay 3.6% of their loan amount. If you make a down payment of 5% or more, the VA funding fee is reduced. VA home buyers also have the option to roll this fee into their loan amount instead of paying it along with their closing costs. There are also special exemptions for disabled veterans, so you want to make sure and chat with our team about that as well. USDA guarantee fee. Like the FHA loan, the USDA home loan program requires both an upfront mortgage insurance fee and an annual one. USDA's upfront fee is equal to 1% of the loan amount and can be added to the mortgage balance to reduce closing costs. It's important to be aware of all the costs associated with buying a home so that you have enough money to pay your closing costs. If you're not sure, give us a call. We'll cover all the closing costs and your options for you. There are several costs to be aware of when buying a home, but the great news is that our team is here to help throughout the process. Again, give us a call at 800-306-1990, 800-306-1990. Happy to go over all of this with you. As always, if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, that's what we're here for. Give us a call. Again, 800-306-1990, 800-306-1990. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.